Society measures financial success through high salaries and the accumulation of material possessions. These outward markers, the car, the home, the designer label, are used as proxies for wealth. Maintaining this image often requires sacrificing future security for immediate social validation. The pressure to keep pace with a social circle can drive spending that consumes nearly every dollar earned. This creates a state of chronic financial stress. When an individual lives paycheck to paycheck, the brain's ability to plan for the future is physically impaired, as cognitive resources are redirected toward the immediate fear of survival. Underneath the polished surface of luxury often lies a foundation of high-interest debt. The luxury goods serve as collateral for a lifestyle that remains one missed paycheck away from collapse. Every dollar used to pay for a depreciating status symbol is a dollar that could have been used to purchase freedom. When you no longer have to trade your next 40 hours to pay for last month's purchases, you achieve the first true tier of wealth, the ability to decide how you spend your time. Moving from fragility to independence does not require a massive inheritance. It begins with the decision to acquire absolute financial literacy. Building a stable financial future requires a strict sequence. It is an operational plan divided into two distinct phases: playing defense and playing offense. Attempting to invest before securing the defensive foundation often ends in disaster. Without a buffer, a single emergency can force an investor to sell their assets at the worst possible time. Following this sequence changes the fundamental relationship between an individual and their labor. It is the only way to move from working for money to compelling your money to work for you. Playing defense is the act of seizing total control over current cash flow before attempting to multiply it. This starts with zero-based budgeting and the 50-30-20 rule. By giving every single dollar a job, whether it's for rent, groceries, or savings, you ensure that your resources are directed toward your specific goals rather than being lost to passive consumption. The next layer of the foundation is the emergency fund. Life is unpredictable, and this cash reserve acts as the primary shock absorber for the unexpected. To be mathematically effective, this fund must cover 3 to 6 months of living expenses. It belongs in a liquid, high-yield savings account where it remains accessible but separate from daily spending. Risk management serves as the final shield. Targeted insurance for health, life, and property transfers the risk of a catastrophic event to an insurer, protecting your accumulated savings from being wiped out in a single day. Once this defensive posture is complete, the daily anxiety of survival disappears. This psychological safety provides the clarity needed to take the calculated risks required for wealth growth. Playing offense marks the point where your capital begins to generate its own income, independent of your physical labor. The stock market provides a regulated environment for this growth. By purchasing shares, an individual acquires a legal claim to the future profits and assets of a global corporation. This graph highlights the power of compound interest. As your investment earnings are reinvested, they generate their own returns. Over decades, the length of time your money stays in the market becomes a much larger factor than your initial deposit. While some attempt to gain wealth through high-risk day trading, the data favors a buy-and-hold strategy. Using diversified index funds allows an investor to capture the growth of the entire market, while minimizing the impact of any single company's failure. Warren Buffett built his fortune by following these disciplined, value-based principles. He focuses on holding high-quality companies for the long term, ignoring the noise of short-term market fluctuations. Achieving success in this phase replaces the reliance on a paycheck with the dividends of ownership. This shift decouples an individual's income from the physical limits of their labor. For those looking to scale their offensive playbook, real estate offers a path to build tangible, physical wealth. Real estate functions as a dual engine for growth. It provides immediate monthly cash flow from rental income while also benefiting from long-term property appreciation. To accelerate this process, many investors use leverage. This involves using borrowed capital, usually a bank mortgage, to control a large asset with a relatively small amount of personal cash. Successful leverage requires using good debt, which is borrowed specifically to purchase assets that generate enough income to pay for themselves. This is the opposite of bad debt, which is used for consumer items that drain your cash flow. The strategic use of leverage is the tool that moves a person from saving for the future to actively accelerating toward it. Even with a perfect strategy, markets will eventually crash. These downturns serve as the ultimate test of an investor's resolve. When numbers turn red, the impulse to panic is strong. Selling during a dip permanently locks in a temporary fluctuation. Here, your defensive foundation proves its worth. Because of your cash reserves, you're never forced to sell at a loss to cover daily bills. Wealth building is less about intellectual ability and almost entirely about emotional discipline required to stay the course when the market is in chaos. As wealth grows, the focus shifts to preservation. Utilizing tax-advantaged accounts allows you to legally protect capital and keep more of what your investments earn. These principles are accessible to anyone, regardless of where they start. René Pineda began his life in El Salvador, eventually immigrating to escape poverty and the Salvadoran Civil War. He spent years in grueling roles as a dishwasher, car parker, and coal miner. He changed his trajectory not through luck, but by shifting his focus from the immediate fear of survival to the long-term mechanics of capital growth. When a physical injury ended his ability to perform manual labor, he turned to this exact sequence of financial education to rebuild his life. Financial freedom is the result of a replicable sequence of choices. It is the process of consistently using capital to buy back your hours until you no longer have to sell them to someone else.
This video is based on the book by René Pineda, Financial Freedom, Your Bold Journey to Wealth and Independence.